Welcome to a new episode, Deep Dive with Mark. Today, I'm honored speaking with Chris in London. Chris, how are you today?
Yeah, I'm great. Thanks, Mark. Lovely to be with you. Appreciate it. It's good to be on the show. I'm looking forward to the next chunk of time.
Yes, definitely. We are really curious about the insights you share with us. So you are the CEO and founder of Longview Economics. With that company, you developed tools to model long-term cycles. I'm a cycle guy as well. I believe in cycles. Everywhere are cycles, you know. We have day and night, we have winter and summer, and winter is coming. We talk about this later. About long-term cycles in the financial markets. Together with that, you're also offering great analysis for commodities. And I believe there is a super cycle upon us, or we're perhaps already in it. We will talk about this as well, which are the focus of this series. Yeah, so it's great to have you here today. And actually, I read an article in March this year at the Financial Times, and I thought, okay, wait, this can't be the Financial Times. So please tell me something about this great article for our audience.
Well, you're very kind. I got an article into the FT talking about the Great Reset, which was really about a debt jubilee and about the idea of some debt cancellation. The basis of it is really I've been a student of the monetary system as part of my day job for 20, 30 years, really. And it seems to me it's quite clear the interaction of the monetary system and the banking system is just not working properly. So I'm a great fan. I think the system's tired. If you look at monetary systems over the course of history, as you'll be aware, they generally last about 35, 40 years. And today we're in this dollar fiat system that's been going on since 1971, which, by the way, if you read Paul Volcker's book, we basically fell into. It was not deliberate and no one came up with that. It sort of fell out of the equation of the last system, the Bretton Woods system breaking. So yeah, I wanted to get some ideas into the FT, especially post-pandemic. I kind of felt, well, the pandemic was starting to get on top of it with the vaccines. What about the idea of cancelling some debt and resetting the system? And I'm talking about the financial and monetary system. As we come post-pandemic, maybe this is a good time to do it. So, yeah, I was just adding my voice to that, really, and the FT were good enough to publish the article. It's not really their typical sort of article, but I've noticed they're more open, I think, to
come on, be honest. How much did you pay them? Come on. No, but seriously, in Germany.
Well, I bought a copy of the FT that day, so I guess about £3.50 or whatever. I don't actually know what it costs anymore, but
totally worth it. So in Germany, people like myself get called doom mongers. If you warn people about something, and for statements like this, you published in the Financial Times. But like me, I assume you are not a doom monger, but simply a student of financial history who sees what's coming. So what do you expect?
Well, I wouldn't say I'm a doom monger. I'd say, like you, I think there are long cycles in history. I think, exactly. Yeah. I actually think we're going to have a boom for about 2, 3, 4 years. I'm a big fan of the 18-year land cycle, which I don't know if that gets much playbook in Germany, but it works very well, certainly in the States, all the way back to 1800 when they privatized land. And I think the banks and the cycle in land prices globally together create lots of booms and busts in economies. So my view is we come out of this pandemic with a banking system that's really got a lot of capital to put to work, that wants to get out and get its money working. And if you look at banks' balance sheets, most of what they do is lend money into housing and real estate, which is basically land prices. So my view is we've got 3 or 4 good years, and then it's going to be another sort of repeat of the financial crisis, or maybe even something worse. But yes, I agree with you that it doesn't make one a doom monger. It's just a simple expression of the way the world works. I mean, cycles are here. They've been here for hundreds of years, and they're clearly not going to go away anytime soon. Although, having said that, as a bit of an aside, I do think if you dealt with this 18-year land cycle and the way housing and the banking system interact, you could dampen those cycles or even somewhat get rid of them. I think it's the credit cycle that really creates and amplifies the ups and downs in economies.
Yeah, exactly. Let's talk about this debt cycle, the super debt cycle we're in right now. So what do you think? What is the problem of our current monetary system? Please explain it short for our audience.
Yeah, the debt super cycle. I mean, I'm a great fan of a book by David Graeber, who wrote a book, you may be aware of it.
Years,
yep.
yeah.
There you go. You know it. And of course, sadly he's passed away, but I think he's an anthropologist, which I always think is great. It's very important to get non-economists to write about economic things, in my opinion, because you get a much more sensible answer. So he wrote that book, and of course, you'll know from reading it, the big debt cycles over history are normally government debt cycles. They're not private debt cycles. And if you look at the last 30 or 40 years, of course, we've actually had a boom in private sector debt as well as government debt. So this is utterly unique, all the way going back to the Babylonians over several thousand years. So what's behind it is there are really three drivers, I think, of the debt super cycle. The primary one is that we live in an international monetary system that doesn't have an anchor. And because it doesn't have an anchor,
like
commercial
gold, for example, in the past. Yeah.
Exactly, like gold or silver or
copper,
even copper, or all sorts of things that most of history you've had an anchor, and except during world wars when they've come off and then they go back on immediately after. So we haven't had an anchor really for 40, 50 years. In fact, pretty much almost my entire lifetime. And so commercial banks have been able to create money and create liquidity and create new amounts of debt. And that's exactly what they've done. And they've been really encouraged by a couple of other factors. One is, I think, the Basel Accords and the financial deregulation. And you dig into the detail, back in the 1970s, if you wanted to take out a mortgage loan, you had to go to a building society, you got in a queue and you waited until enough people had saved the money. And then, of course, from 1980 onwards with Margaret Thatcher and Ronald Reagan and so on, we deregulated finance, and then we had the Basel Accords. And now we're in the situation where commercial banks create money so you don't have to queue. And actually, the amount of capital they need for a mortgage is about 1/8 of what they need to make a corporate sector loan. So if you look at the commercial banking system's balance sheet and take the UK as a typical example, in 1980, the commercial banks had zero mortgage debt on their balance sheet, absolutely zero. Today, about 70% of their lending into the UK economy is mortgage debt, and really only about 13-14% is corporate lending. So the majority of what they do is they create money and they lend it into the housing market. And by the way, they also create money in a lot of these investment banks, and then they've invested into financial markets. So the biggest activity is mortgage loans, and the second biggest is financial market activity. So you can see why we're in the world we're in, and all of that comes down to the idea that you don't have an anchor to restrict their behavior and stop all this money creation and debt creation.
So you're saying the commercial banks create money out of thin air, and they create actually financial bubbles. Like in the last 30 to 40 years, we saw the bubble in 2000, the Nasdaq bubble. Then we saw the subprime bubble in 2007. And the answer from the central banks was always lowering the interest rates, flooding the system with money, and the commercial banks said, hey, we love this game. They created money out of thin air, gave it away to private people, or they bought real estate, or they bought ETFs or shares from Apple, and created the next bubble, the bigger bubble, which is called the everything bubble, which we are in right now. But now we saw Corona. And what do you think? Is Corona the next trigger for the next super bubble?
Well, I think Corona is just an accelerant of it, really, isn't it? I mean, and of course, that was what's interesting about the banking system, that initially in Corona, they took very big loan loss provisions and were worried about insolvencies and so on. But because there was so much aggressive monetary and fiscal policy support, they're now releasing those loan loss provisions back into profit, which enables them to make more lending and put more liquidity into the system. So, yeah, I think we're in the everything bubble, and we're gonna add the house price bubble to that over the next few years. It's already started. You can see if you look across the globe, house prices are very high, running at 15-16% year on year in quite a few countries. So that's happening, and I think we'll get to the mid 2020s and we'll find that financial markets and housing markets and private equity, all sorts of other stuff is going to be very much and the everything bubble on steroids, I suppose. But the heart of it is liquidity creation and the way central banks interact with the commercial banking system. One stat I would just give you, up until the financial crisis, and this stat won't have changed much, but in the 20 years preceding that, commercial banks created basically 97% of the money supply. So they create the vast majority of the money, And, as per Mervyn King or several other people, luminaries, when a commercial bank makes a loan, it creates new money. So that is the heart of the system. And without the anchor, there's no restriction on their behavior, basically.
Yeah. Because since 1971, they can print money. They can make more and more debts, actually, because we have to explain to our audience. They create money with giving loans to private people, to companies. So they it's a debt-driven monetary system, actually. And that's why it's called a fiat money system, debt money. So every time a commercial bank gives out a loan for a house or a corporation, they create new money. They don't go to the cellar and get the money out of the vault. Yeah, they don't have it. They just create it on the computer. So this is a very important thing.
Exactly.
So so the thing is, and
it's worth saying, but it's worth re-emphasizing that point, because when a commercial bank creates a loan, it's kind of topsy-turvy to how you think about it. In the financial text, in the economic textbooks, it's we all save money and then the financial intermediaries, the banks, pass it on and make loans. But that's not it at all. As you say, it's an electronic double entry bookkeeping. Commercial bank says, yes, I'm going to give you a mortgage, and on the one side you get a debit, the other side you get a credit. So one deposit and one loan, and that's immediately created. And then the deposit gets into the financial system and starts moving around the financial system. So the majority of money that's been created in the last few decades is by commercial banks.
Yeah, it sounds a little bit like a Ponzi scheme, but we talk about this another time. But anyhow, so you expect actually a melt up, a crack up boom, so that we see 3, 4, 5 years more rising prices for real estate, stock markets go up. So we see the end of the bubble, actually, the everything bubble. So a melt up like in 2000 when the Nasdaq just quadrupled in the last couple of months. And what do you expect afterwards? Because you wrote in your article that we need a financial reset. And by the way, I assume you're not talking about the same great reset like Klaus Schwab of the World Economic Forum, don't you?
No, that's why I called it that. It was a play on his words.
Smart, very smart.
It's the real great reset we need. We don't need to build back better or build back green or build back whatever. We need a financial system reset properly. That would be brilliant for economic and income inequality.
Definitely. I agree with you 100%. I'm on the same page. So what do you expect after we reached the peak? What will happen then? Will there be a historic crash, and will the politicians be forced to establish a sound money system? So what's your plan, or what's your vision on this?
Well, my hope is that's what a crash will do, because we got quite close, in my understanding, post financial crisis. The G20 were talking to guys like Mundell about currency unions and things like this, and they got close, but then of course the pressure eased as the global economy recovered. So I think when we get another crisis, I hope that policymakers will sit down with people and think about what's driven this crisis. Why has it come about? Why haven't we solved I've been in this business now for 30 years, and the mantra is always, animal spirits are going to come back on their own. Productivity is going to there's always an excuse as to why this time we'll come out of this crisis fantastically. But it's quite clear to me that the way the system's structured, the Keynesian demand side management, hasn't worked. It's too one-sided. You need to think about the supply side of the economy. And just coming back to your point, I think the reality is the reason we have such high income and wealth inequality is because really what we're doing is we're channeling new money into unproductive assets, houses, instead of channeling money into productive uses. So investment into business capex and innovation. And I'm not saying we're not doing any of that, but I'm just saying the bias is way too heavily tilted into mortgages rather than into innovation. So if you control the monetary system, you control the money creation, and you enable, I think, much more channeling of savings into proper productive uses, higher productivity growth, and therefore better income inequality, less income inequality, basically, what I think will be the outcome, and less of a speculative economy. I always think the UK is basically a play on house prices, financial markets, and retail shopping, with a bit of a few good businesses on the side. I don't mean to do them down, but it's kind of an interesting illustration of that. So I think we'll get a significant another financial crisis of some form. And that will move politicians to, I hope, adopt new policies and reset the international monetary system. So for me, if they thought about how it worked, I'd be really encouraged. My problem is I don't think enough of them think about it enough. And when you talk to them, I've talked to a few MPs about this, and their kind of eyes glaze over. I think it's just too far away from their knowledge set. Exactly. But the one thing I would say that's really encouraging, Mark, is we did have a debate in Parliament, in the British Parliament, about money creation. I don't know if you saw that. Back in 2014, they had a private member's bill brought by an MP called Steve Baker, who does understand how money's created. And it was the first debate we'd had on money creation in the British Parliament. You can see it all on YouTube. It's fantastic. Yeah. It's the first one we've had since, I think, 1844, which was, I think it was the Bank Charters Act. So it's quite a serious time when they last debated money creation in the British Parliament. So I was really encouraged to see that they had a debate on it. Unfortunately, only 30 MPs turned up, and there's 650 of them. So there's a few that understand it, but not many, sadly. So yeah, I really hope the crisis, when it comes, as I say, probably the mid-2020s, who knows, but that's, I really hope they take this opportunity to really grab the bull by the horns, because we could create such a better global economy which are much fairer, much less of this divisive politics. To my mind, a lot of the nationalistic populist politics is really driven by we know what it's driven by. It's driven by people being left behind. I know. It's not complicated, is it, really? So I hope they do. And I've got plenty of ideas to what they could do to change it, but at the moment, they're certainly not listening to me.
Yeah, but we listen to you, and I will ask you in a second. But before that, I have to mention, I think the main problem of everything, the inequality, the mega bubbles everywhere, is our wrong monetary system. And like you said, a few people are participating very well in the system, like the 1% or 0.1%. And it's called, I mentioned it in my last book, it's called Cantillon effect. I guess you know it, Irish economist, Cantillon effect. And the Austrians like to use it. And that's the real problem, because the majority are just getting poorer and poorer, even if you work hard, but you can't afford in a suburb of London a house anymore. It's impossible. Even if you have a good paid job in the city, it's impossible because the prices went up like crazy. So we see an asset inflation like never before. And I think it was Winston Churchill who said, never waste a crisis. So don't you think that the politicians and the central banks using this crisis right now already to transform the financial system in their way? We're talking about CBDC, central bank digital currencies. We're talking about the digital euro, the digital pound. So don't you think they will establish a new system? They're already building it behind the curtain.
Well, I don't know. I'm not so conspiratorial that I think they're building it behind the curtain. I don't know. I'm not. I mean, I think they're doing this in response to what China's doing and in response to what they're seeing with digital currencies. I mean, the reality is we already have digital currencies. We've had it for years. We've had it for donkey's years. It's not new. It's just a new thing in the public psyche. As we said, 90% of the money supply was created by commercial banks digitally. So I don't know whether it's conspiratorial. Possibly, it works both ways, doesn't it? It's easier to stop criminal activity if there's only digital money that the central bank has more of an oversight of, but equally it's harder to enforce your own liberty, and there's more of a surveillance state. So you can play it both ways. But at the moment, I'm not convinced we'll get to that point of central bank. We might do, but I'm not sure.
Because ECB had Lagarde, she came out yesterday and she tweeted and they said, hey, we're working on it. It will come definitely, because it's part of the zeitgeist. Everything is digitalized. So I expected, actually, I predicted it a couple of years ago, because it's much easier for them, of course, but then we don't need the banks anymore. But it's a totally different topic. But I think another question I have for you, I think you're familiar with the long-term debt cycle from Ray Dalio and his studies. And I see a lot of similarities between him and you, of course. So Dalio speaks about a 70 to 80-year debt super cycle. You're referring it at a 30-year super cycle. So what's the difference here? What I'm missing?
Well, he just didn't copy my stuff correctly. I think that's the problem.
Yes, I knew it. Okay, next question.
No, I think, to be honest, I would say I think this private debt super cycle we're in is unique. I don't think it has a, as I said, explained at the beginning. For government super cycles, sure, you get those in the debt sense, but not the private sector. This is a very unique situation, I think. What we've had in the last 30 or 40 years. So I wouldn't see its hallmarks throughout history in that sense. You do get the hallmarks of money creation and fiat currencies being abused throughout history. We know that. So there's plenty of examples of that. I think there are 200 fiat currencies prior to 1971, 200 examples, and they've all failed. So yeah, there's some cycle there, but yeah. So in that sense, I don't know about Ray's cycle.
Okay. So let's talk about the financial reset. What do you think? How are global governments going to reset our financial system? You think they will default, or there will be a currency reset, or they will inflate it away? In your article, you're talking about a debt jubilee. So what do you expect? Do you really think the governments will get out and say, "Hey, the debts we paid off, we just deleted"?
Well, I think they should. I'm not sure they will. I mean, there's quite a stretch to think they're going to actually have a debt jubilee. But yes, I mean, you'll be aware of the history. This goes back to Jewish times, when every 50 years they would reset. And actually they did it to make society fairer, because of course people who tended to get into debt were struggling more, and it was considered a good way of resetting the clock and resetting the equality, and if you think about it, really, the other side of every debt, there's an owner of that asset, which is the debt. So if you think about the idea that 1% of the West own 50, 60, 70, 80% of the assets, I forget what the exact number is, it's very high. So they're on the other side of that debt, essentially. So actually, by cancelling a lot of the debt, you're effectively equalizing the system up. Now, whether or not you can cancel the whole lot, I'm not suggesting you necessarily do that. In fact, all I was suggesting in the article was there should be a new Bretton Woods conference, like there was in 1944, when all the leaders of the free world sat down and discussed how they would have a new international monetary system. I think we need to reconvene that kind of conference. People should sit down. We should think about how much debt is going to be cancelled or cross-cancelled, and what kind of financial system they want the other side of this new monetary system, and how they're going to anchor it. So it has to have an anchor, in my opinion, to reduce the number of bubbles that inflate. And in fact, if you look at the Bretton Woods system, I remember looking at this 10, 15 years ago, under Bretton Woods from 1945-ish to 1971, I think I'm right in saying there was one banking crisis in the world amongst scores of economies. I forget the exact stat. Whereas, of course, if you look at the data now, the number of banking crises is dozens and dozens and dozens. I forget what the number is. But so it proves that there's a world where you can avoid a lot of this perennial crises and bubbles and bubble inflation. You're never going to get rid of them utterly, completely, but you can get rid of them in the main. So I definitely think there's some easy debt cancellation, which is a starter for 10, which is every central bank's ownership of its own government's debt. That's the opposite side of the same balance sheet, basically. Just merge them. And there's all this debate about you can't destroy money and there's a liability the other side. I think you can get away with that with clever accounting. And but putting that to one side, you can definitely cancel debt, especially if you reset the whole system and you start again the other side. So there's lots of things that need to be thought about. But the easy debt cancellation is that government debt. Maybe you take a slice off mortgage debt across the globe. You have to recapitalize the financial system, and you have to come out with an anchor the other side of it. But I do think it's plausible. And I think the main thing is really to push politicians to think about the idea of, one, why this system isn't working. And this is the real reason, as we said earlier, you've got this income and wealth inequality. And two, what do they need to do and get people around a table to start establishing a new monetary system. So you need to think about how's money created, who has the authority to create money. There's a ton of ideas out there, from Larry Kotlikoff and his sort of It's sort of like a version of narrow banking from the 1930s, but it's more sophisticated than that. That you have a narrow banking system that enables acts as a deposit-taking institution, and then if you want to invest in mortgages, you buy an ETF that lends people money for mortgages and things like that. If you want to invest in small company businesses, you buy an ETF that does that. So people know exactly what risks they're taking, rather than the system we have today, whereby, of course, banks take risk. We don't really know about it. And then the taxpayer bails them out through the socialization of losses, the other side of the crisis. So in terms of, what kind of system? We need an anchor. We need some debt cancellation. We need a new form of who creates money, the other side of it, I think. And we basically need our political leaders to sit down and talk about that.
I agree.
And I really hope they do. I really hope they do.
They will. They will. It's a limited time frame, and they will do it. So, what would your perfect monetary system look like?
Well, that's a very good question, and I'm not sure I'm 100% convinced exactly what it's going to look like. I like the idea of Friedman having a steady growth in the money supply every year. I think I like the idea. I think it's positive money. Put it around that you have a sort of money creation board, like we have a central bank, independent central bank that decides how to set interest rates. You have an independent money creation board that just allows you in crises year to ease up on the money supply a bit. Because I think, one of the problems with monetary standards is the deflationary effect that you get in a financial crisis. But the number of crises should be significantly reduced. But I think you need that capacity for that money creation board to be able to say, well, actually, this is a crisis year. We're gonna allow much more money creation for 12 months. And I think they should be restricted in that sense, so that it doesn't become something they slip back into doing it for 2 years and they get stuck on it. So, I think you need that Friedman style 5 to 7% creation of money each and every year. And that ability to change that rule once in a blue moon,
and with the anchor
in major downturns,
backed with something.
I personally think you could do it with a modern digital currency, but I don't want to start that conspiratorial discussion.
No, but seriously, because this is where I got a little bit confused in the article. Will it be backed with something like? Will it be a sound money system? Will it be backed with gold or with Bitcoin or with the other digital currencies? Or what's your take on this?
Well, I think you can do it with a central bank digital currency, which has a standard growth in supply each and every year. So that would be effective backing.
Because central banks,
well, it's backed by the rule. It would be backed by a rule, basically. So you could do that. You might not like that.
I don't trust them.
Well, I mean, sure. I mean, I think essentially they're backed by democracy. So, I mean, personally, I don't think it's conspiratorial. I think these institutions get stuck in ways of thinking, and it's very hard for them to get out of them. I'm always minded of the stat that I think it's something like over 90% of economists who are working in the world today have either worked in a central bank or a treasury or an international monetary institution. So there's groupthink. There's huge groupthink. And everyone gets stuck in it. So I'm less the believer in the conspiratorial. I think it's more that the systems and institutions get stuck in, and they need reform, and they need outside energy to do that. So I don't have a problem if we reform them, and then the rule is the growth in the digital currency is 5 to 7% per annum. But I mean, I'm not sure you can. I don't think you need to go back on a gold standard. I think that's 100 years ago. There was nothing wrong with it. There were some challenges with it. People always remember the wrong things and forget the good things. I think average real GDP per head growth was much better at that time than it is now. All those sort of stats, less crises and so on. So people always remember simply the 1930s and not the rest of it. But no, I think the anchor can be a central bank digital money and a rule. I mean, I can see you're not so keen on that one, but
not at all. But hey, I'm listening. I'm open-minded. No, I just think there is no. I think in 2018 there was a tipping point, and there is no way back. They kicked the can too far down the street, and they're just trapped within printing money, buying all the bonds, and they can't raise the rates, the interest rates. If the ECB, for example, will raise the interest rate to 2%, Italy, Greece, Portugal, Spain, France, all these countries in the southern part of Europe, of Germany, I wanted to say, not yet, no, just kidding, is they're done, they're bust actually. And the same in the US, if they raise the interest rates, the debt will explode, and I think the government will be out of money in a second. So actually in Europe, the central bankers are not voted from the people. They are elected by politicians, and this is a big difference. And with Lagarde, we have even somebody who got charged for, I think, money laundering or something in France. I don't know, but she was in front of the court. So anyhow, I'm not a big fan of central banks because they messed it up all the time, even in the 1920s with the Reichsbank, for example, which actually was the foundation for the rise of the Nazis. Horrible. And we see populist parties getting stronger and stronger, especially since 2008, since this turning point, I think, which started a new cycle. And that's why we have left and right-wing parties all over Europe. And it's all because of money. I think money is, follow the money. It's the key to everything. So, but Chris, let's.
Well, I'd agree with you. I'd agree with you on that. But I just think if you look at monetary systems, to me, the International Monetary System has a sort of natural shelf life of about 25, 30 years.
Exactly.
And this one is too old. That's the point.
50.
But we can bring in a new system and it'll refresh and reinvigorate, and we'll start with new rules. And I think the institutions will serve us well. I think ultimately the foundation of democracy does give you that ability to refreshen and trust institutions once you get into a new style and a new way of thinking. But I think the problem with the alternative, which is a hard money standard, if you like, a hard gold standard, I guess, is what you're thinking about.
Not yet. No. Actually, not. No, I think Bitcoin is pretty interesting. So I think it will be a digital system in the future.
Bitcoin would be fantastic, but governments are never going to allow Bitcoin because they would lose control of everything.
Exactly. So, that's why they hate it. But it's decentralized. It's not with the government. It's not with the central bank. And central bank, it's for me, it's socialism. Yeah, it's like a planned economy. It's limited. It's deflationary. It's everything else than our monetary system right now. So this is why it's perhaps better. It's the only shot we have. That's what I think. And I think it's Gresham's law. People will decide. Will they buy gold? Will they buy silver? Will they buy shares, equities, real estate, or will they buy Bitcoin? And I think if I look in the last 10 years, I just see against Bitcoin, every currency was already in hyperinflation because Bitcoin just went up through the roof. Same with gold. We had a highest gold price in history last August. It means people lose trust in the fiat currencies and they look for a safe haven. Some people buy equities, other people buy real estate or gold or Bitcoin. And I think we should give it a shot. But of course, they hate it. I agree with you, Chris, because they want to have control over the monetary supply.
Yeah, but there are some downsides as well. But the reality is, in its purest form, it's a lovely idea. 21 million limited supply, fantastic base for a monetary system. But of course, if it's not regulated by governments, it's open to abuse, and you get all sorts of unpleasant actors in the whole Bitcoin system, as we've seen, the amount of fraud. So I think that's the problem. You can't just leave. That's one problem. Governments can't just leave sort of grannies to have their savings stolen. There has to be some form of government regulation in the kind of society we live in. Otherwise, you'll have the Wild West of finance. So that's one thing. But I think the main thing is, it's as Henry Kissinger said, he who controls the money rules the world. So, governments are never going to allow that. So it's unrealistic to push for that as a solution. I think we have to push for things that are more realistic, which I think is something like what I'm trying to push for, rather than I can see the beauty of Bitcoin, but it's never going to happen. They're never going to allow it, unfortunately.
If it happens, we make another interview.
Well,
yeah. No,
I won't have anything to say, will I?
Yeah, no, it's experiment. I agree with you, but we just saw El Salvador introduced Bitcoin as a currency, and it's very exciting times. We will see how it plays out.
Well, it is, but that's like saying the Chinese government are going to introduce a central bank digital currency. It's for surveillance purposes. I mean, that's an authoritarian state, or El Salvador. I'm not sure that's a great example of where Bitcoin's been adopted, quite frankly.
Yeah, we will see. We will see. I think other countries will follow, and it's a big opportunity for the unbanked people. Definitely, it's a hedge against inflation, and it's a possibility to transfer money all over the world, unlimited, decentralized. I think it's a chance for every citizen in the world to have part of sovereignty and part of a banking system, financial system. But yeah, I see we have to make a special video about Bitcoin or digital money, but this we do next time, Chris. Definitely. Okay. Let's finish up with some important questions, because you run an investment and research firm. Yeah. So what do you recommend your clients as a protection against this financial reset you see upon us?
Well, I don't actually recommend anything at the moment, because I think we're 4 or 5 years out. So I would be riding the wave. So I think you want to go with the assets that are going to inflate. So exactly. At the moment we're in an equity bull market, and it's pausing, in my opinion. It's a classic. Generally bull markets, they're very strong in the first year, and then in year 2 they pause for 3 to 6 months, and they sort of regroup. And you can think of 2004 after the 2003 rally out of the TMT bursting bubble. So we're doing that, and then I think we'll start rallying again for the next few years. And so our advice to clients is to participate in that. In the very long term, when we get to the crisis, there'll be various things you can start to buy as hedges. And one of them will definitely be gold. So, at the moment, we're not positive on gold. We've had a good run in gold, and we love trading gold. Absolutely, it's just such fun. I'm neither a gold bull nor a gold bear. I just think it's a fantastic thing to trade. So we love getting involved in trading gold and oil and equities and the dollar and stuff like that. But at the moment, I think gold come the autumn is going to start struggling again. So I'd be less keen on gold as equities start rallying. But I think in 3-4 years' time, it'll be a great place to hide out. And for some of it, so will be Bitcoin. But you have to be careful, because I think both Bitcoin and gold will be subject to the credit crunch challenges. Yeah. So we saw this in the middle of the 2008 crisis, October 2008. When real bond yields back up sharply, gold got hit hard, and so that you've got to be careful of that. But yeah, those are places to hide. Treasuries, you can buy some defensive yielding equities, etc., etc. I also think residential real estate is a good place for a few years. Cool. But yeah, it gets harder. But when we get there, we'll have some better ideas for you.
Yeah, definitely. We will stay in touch. Definitely, I have to invite you again. Let me finish up with rapid fire questions, just short answers. What do you think will be the next global power, China or the US?
I don't think China's ever going to be a major global power. I don't think they're going to get there.
Okay, perfect. Safe haven currencies, Swiss franc, pound, dollar, euro?
Norwegian kroner.
Oh, okay, good. Okay. What do you think?
It's different.
Yeah, it's different. Will the current fiat system still be around 2030?
In 2030, I hope not. I hope not. Probably not. Okay. That's probably about its demise, end of the 2020s, yeah.
Okay, cool. Yeah, other analysts say the same, 2030. So what do you think will be the best asset for this decade?
The best asset for this decade will be a commodity-based asset. Commodities in general. It could be copper. It could be gold over the whole decade. It could be all sorts of commodity-based. That's where I put my money. You could go to more obscure commodities, ones linked to all this climate change spending and so on. Yeah. Maybe it's cobalt, maybe it's lithium, things like that.
Commodities or miners, stocks in miners?
Oh, miners, exactly. So the iron ore stocks are cash cows now. Yeah. Okay.
And now the last question for you, Chris. It has nothing to do with money or investment. What is the meaning of life for you?
The meaning of life? Well, I'm a Christian, so that's quite a simple one. I believe that we're all called to follow worship God, follow Christ, and find out what our purpose is in life.
All right, perfect. Where can find people more about you and your firm?
What do? We basically we think about markets on 4 time frames: 2 weeks, 2 months, 2 years, 20 years, and longer. And we try and help people make money. Basically, we try and help people enhance their returns. We believe in measuring how good we are. We're constantly measuring and publishing that. And we love financial markets, love financial history, love to learn, love to be challenged.
Perfect. I will definitely put a link from of your website under the video. And I thank you very much for your time. It was great talking to you. And I hope we do this same soon again.
Yeah, thanks, Mark. I really appreciate it. Thank you.
Thanks.
Thank you.